We need to talk about Palo Alto Network's pretty disastrous earnings announcements. We should talk about the California budget shortfall, talk about mortgage demand, deal making, and of course we will close with some bonus material and a question for you. Yes, folks, I have a question about the ORAT Celebration 2025. Obviously, we just finished ORAT 24, but I have a question about 25 that I will leave to the end. So let's get into it. Palo Alto Networks. Over the weekend, I think it was Monday, I talked about Palo Alto Networks being a critical earnings announcement. Now, to remind you why I thought it was so critical, Palo Alto Networks is a leader in something called cybersecurity. As someone who had sold in cybersecurity for about a decade, it is the software that is least likely to get cut. Now, it is fair to say that Palo Alto Networks exceeded earnings expectations. They beat top line, they beat bottom line, but they gave a significantly lower forward guidance. Now, it is certainly true, this could be Palo Alto Network specific. Perhaps they are changing their business model, perhaps they're changing what they sell, perhaps they're layering in AI. I don't know, there could be some unique Palo Alto Networks issues. Again, I am not an owner, nor will I ever be an owner of their stock. I'm just saying, if Palo Alto Network missed, what does that mean for other software companies? Generally speaking, no bueno, not good. Now, it is fair to say that Palo Alto Network's CEO is saying things like there's no issue with demand. But they also said, I want to read this quote, expected a difficult customer. Again, selling in this space for decades, selling in software for multiple decades. Let's just say if the buyer for cybersecurity is getting quote unquote difficult, there is a lot of other software that is not mission critical that would likely be cut first and cut in a big way. So again, Palo Alto Networks, we've talked about it for years, being that earnings announcement that I look at for other software. So it broke, it missed, it's likely down big today. Again, I didn't check because I don't own it and won't own it. It's just a tell for other stocks. SolarEdge, man, what a disaster that was. They expected revenue, Wall Street, let's do it this way. Wall Street expected revenue of $406 million going forward, 406, let's call it 400. SolarEdge said they would do basically 200. Just in case you're bad with math, that is a 50% miss. Horrible guidance, inventory backlog, high rates. It is not good in the solar space these days. They built too much, demand slipped, not a lot of goodness going on in solar. And that is a hell of a cut. Wall Street thought 400. Now you're saying 200? Not good, not good. Let's talk about Wells Fargo. Where is it? Wells Fargo analyst Eric Nelson. Shout out Eric Nelson. Don't know who he is, but I want to give credit where credit is due. Talked about steep rate cuts coming. Eric sees a job market that is frankly fictitious. My words, not his. He's basically saying the market is appearing strong, but the underlying data is hiding reality. And Eric believes that there will be steep rate cuts coming, likely more than a quarter point, likely in great succession. Eric is I'm guessing he's a bear on what is going on in the economy. Currently, if you look at the market or the smart money, there's currently only a 34% chance of 4 rate cuts. Now, what does 4 rate cuts mean? It means 100 basis points. We would go from 5.25 to 4.25, for example. So again, 34%. What we shall see, there's a lot of talk about February CPI, a lot of talk about February jobs data, so we will see. Higher for longer, right? Higher for longer. I'm going to stick with my first cut in June. I've been saying that for quite a while. So we'll see what happens there. Don't know if you guys know what's going on in California, but it looks like good old Gavin Newsom's got his hands full. Gavin Newsom initially estimated that there will be a $38 billion shortfall in tax receipts. Well, they just published a report yesterday, or at least I read it yesterday, saying that it is far more likely to be $73 billion. Just in case you are bad with math, that is roughly a 100% miss. You expect 38 negative, you're going to get 73. Yeah, California, we're going to have to expect cuts in programs, higher taxes, something you can't get from. That's just bad. That's just bad. 73 billion. And again, the number is still ticking. Let's talk about mortgage demand. Again, we are getting some very clear source from that higher rates matter. Rates obviously have gone over 7%. We've talked about it. We've talked with agents and mortgage brokers and all of that. Purchase demand down 10% week on week. Refi demand down 11%. Shocking, folks. Rates matter. Rates matter. It will be very interesting. I put this out on Twitter. Do me a favor, follow me on Twitter or X. I said this yesterday. Let me know what you think. I said, I hope we stay at 7% for 3 or 4 months. The housing market is broken. The housing market doesn't get fixed at 6.5. In fact, I believe, given what we saw 3 weeks ago, that if rates slip to 6.5, the housing market, I don't know, gets more broken. Is that a word? Brokener? I don't even think that's a word. Brokenist? That's definitely not a word. It gets bad. So again, I am hopeful that we stay at 7. Let's just do the deals that make sense at 7. Let the inventory build, let demand go, let incomes go up. Let's start to heal the broken housing market. So we shall see there. We are getting signs that more and more people or experts are saying what I told you last December, that 2024 is going to be the year of deals. Remember, we talked about this. I called 2024 the year of acquisitions. Well, thus far, February is not even over. We have had a 55% increase in deal making. There have been 56 deals announced with a price over $500 million. So again, it looks like we got another one right, AKA nailed it. This is just the time where, again, the big will get bigger, the strong will get stronger. They will take out their competitors, i.e., I forget who's Capital One buying Discover was announced, I think, on Tuesday in an all-stock deal. So lots of stuff going on. Now let's talk about ORAT Celebration 2025. I have talked with Melinda at the Blind Center. We have confirmed the dates, President's Day weekend 2025. I have a question for you. I am okay either way. Either way doesn't matter, but I want to ask you, the audience. A, do you want me to start ticket sales today or tomorrow? Or would you rather me wait 6 months or 9 months and sell them later? Some of you have reached out saying you're ready to go, you'd like to book it in now. Some of you I might think might want to do it later. I have no idea. I want to hear from the audience. Do you want me to put up an Eventbrite and the tickets now so we can just sell out quickly and get on with our day? Or do you rather go later? Second, Sean Cannell has been gracious enough to reach out to me after his presentation, and multiple folks from our event have asked Sean about his Grow with Video Live event that is occurring in, I think it's in April. Go to the website, growwithvideolive.com. You can go there and check it out. He is giving you a 10% discount on general admission, which is basically $400, or VIP, roughly $1,000. If you want to go to Grow with Video Live, go to the website, use the discount code ZUBER. He sent it over all caps, so I'm going to guess it's all caps, ZUBER. And if you're going, let me know, because I got my VIP ticket. I will be there checking out. I think Ty's coming as well. But yes, If you have been inspired by what Sean Cannell had to say on stage about the about the opportunity growing in the creator economy in the next 3 years, thanks to Goldman Sachs, I don't know of a better guy. Growwithvideolive.com. Check it out. If you're going to get a ticket, might as well save 10% and send a thank you note to Sean for that, because he didn't have to do that, but he wanted to help out. Second or third, I guess, your first free bonus podcast is coming out today at 9 a.m. Folks, if you don't know, I spent $20,000 on a high setup podcast room with the goal of creating 20 podcasts. The team did great. They created 21. I'm going to release a few of them here on YouTube, and the rest will be in the bonus material of the event. Again, everybody who bought a ticket, everybody who got virtual, you will not only get the recording, you will get all 21 podcasts. So again, I thought I would release the first one into the wild today, 9 a.m. Pacific. Sean Cannell, TYLG, talking about how to make big money with your passion. Enjoy that. Next, Dion. Dion Talk was featured on Bigger Pockets Rookie. We should show our support to our brother in arms who crushed it at the event over the weekend. Yes, Dion, Bigger Pockets Rookie. You should give that a shot. And then we got some congratulations. This is a highlight of my day when I get to congratulate ORAT followers for doing the work. LM, congratulations on your golden ticket. Your card will go out in the mail. And then Andy, congratulations on your next deal. Andy, LM, congratulations for doing the work. Thank you so much. Again, folks, your first free bonus from the event is coming out at 9 a.m. Shout out Sean and Ty for holding it down. It was actually, I think, the first recording, so it makes sense to give you that one. We're still working on cutting up the 21 hours of content, so a little bit more time there. Yep, I look forward to giving you all the free stuff, exceeding your expectations with more free stuff. So, all right, folks, take care of yourself. Later.